So what I'm about to tell you is bonkers, actually. But let's try and figure out what the government is trying to propose right now. In a nutshell, today the statement came out that the government is planning to allow universal credit recipients, so people who get benefits of all sorts, housing benefits, living expenses benefit. The government's proposing to allow them to use their universal credit payments to buy a house, to get a mortgage and buy a house, or buy their own house, I should say. So if they're already in a council flat or a social housing accommodation, they're going to allow them, they are proposing to allow them to use their universal credit towards a mortgage. So I've got a few questions about this. So first of all, how does this actually work in practice? So you've got people who are unfortunately, are receiving some form of state benefit because they need to make ends meet, and rightly so. People are stepping in. The state is pooling together the taxpayers' money, our money, to help these people. So they're saying then, these cohort of people are now going to be able to use the same taxpayers' money to buy their own house. A couple of questions. So how do they, first of all, save for a deposit? The biggest challenge for people, any person, to buy in properties at the moment, they will tell you, is the challenge is deposit. So if you don't have a deposit, how will they get that? First thing. Second thing is, if they've got the deposit, they are by right now not allowed to have to be in receipt of universal credit. So I think there's a limit that somebody can have as a saving before their benefits or the universal credit is cut. So both of them don't really add up. You have to have a deposit, but if you have too much savings to use as deposit to buy the house, you're not allowed to have the universal credit. Third thing is, once they do buy the house, there are some other challenges that may crop up. One, does that mean that they, when the circumstances do change, and if it does change, for example, somebody loses their job and the job that they were having and their income was being topped up by universal credit, they lose that job. Who happens to then step in to pay that difference? So will the state pay for this? Is it the taxpayers that pays for it? Because bearing in mind, the government don't make any money. It is very much a taxpayer's bill. What happens if there's repairs to be made? So where do they get the money from? How do they find that money? Because right now, any kind of rental accommodation, the landlords will step in and actually fix these things. That's why we have contingency funds to be able to do that. If you are on universal credit and you are struggling, quite frankly, and then you've got a boiler that breaks down, that's 1,200 quid, how are you going to find this? There's a tap leaking, or there are mold happening. There are all sorts of things that are creeping up with those houses or these properties. How do you find that money? Is it now the state again that funds these property repairs? And if they don't fund it and the property gets into severe disrepair, whose responsibility is that now? I mean, it just doesn't make any sense so far. Third question is, what if then, as we are seeing now, landlords and investors, interest rates are going up, inflation is over 10%, and the Bank of England is trying to stem that run on services and goods, so by pushing up the inflation, the interest rate. So what happens then when these universal credit recipients who are getting their universal credit and then funding their mortgages with that fund, when interest rates go up, their mortgages go up? So does that mean now we also have to fund via taxpayers' money the increase in universal credit to be able to, for them to afford that mortgage? So by doing that, that means universal credit payment will go up, but also the overall bill of universal credit from a country perspective goes up. So now we're having to doubly pay for the increase, but also increasing the level that universal credit recipient gets so that they can afford these mortgages. And if they don't, the state is also at loss. So the next step will be they don't pay, they can't pay, the interest goes up, the state doesn't intervene. Now you've got people who've got higher increasing mortgages at risk of default. They default for 3 months. After 6 months, they get evicted. The house gets repossessed by the bank. They're now having to be housed again by the state. It is bonkers. And I just think, this is very ill thought through policy by this government. And it's really, quite frankly, it's detracting from Partygate, it's detracting from the vote of confidence that Boris Johnson should come through as well. So no matter which way I look at it, there's holes to be picked at this policy. I think it makes good news, or it tells people, voters, look, we're going to get you to buy a house, but the way it's been formulated, certainly right now, is very ill thought through. Be interesting to see what you guys think about it, and what the merits are and potentially what the challenges are.